morning. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines this morning. Asian markets are off to a steady start after equities on Wall Street closed at a 6-month high on revived risk sentiment. The RBI's Monetary Policy Committee is likely to cut the repo rate by 25 basis points, according to 41 economists that were polled in a Bloomberg survey. Now, nearly 90% of the loans advanced by the lending arm of IL&FS have turned bad, according to the new board appointed by the government. And lenders of Jet Airways are planning to infuse 1,500 crore rupees into the struggling airline via debt against promoter shares. That's according to two people in the know who spoke to Bloomberg Quint. And oil prices fell after heading towards the $70 per barrel mark after the Energy Information Administration raised questions about a global oversupply. Let's talk about the US markets now, which ended off their high point of the day, but with gains. Progress over trade talks between the US and China was one of the key factors behind the investor optimism. The S&P 500, by the way, is now only 2 percentage points away from an all-time closing high. Renita Young of Bloomberg News tells you what happened in that session on Wall Street.
U.S. equities slightly higher on Wednesday as the S&P 500 made its 5th straight day of wins, and the Nasdaq saw its highest since October before scaling back just a little bit. But declines in consumer staples and energy sectors really helped temper that optimism about global growth. Now, we did see chip stocks surge after Nomura Instinet took a positive long-term view on growth for the sector. Facebook seeing declines after it sees data privacy issues with millions of user records found in Amazon cloud servers, and Boeing shares falling ahead of Thursday's release from Ethiopia of its preliminary 737 MAX crash reports, and Blue Apron soaring after naming Etsy COO as its own CEO. Across the asset class, we saw oil hovering near its 4-month high in New York, and Bloomberg's commodities index climbing for the 3rd straight day. Iron ore marching higher over Brazil supplies concerns, and bond yields globally continuing its climb from recent 2-year lows. And that's a look at your Wednesday Wall Street action. In New York, I'm Renita Young for Bloomberg News.
All right, let's turn to the Asian markets now, and we are joined live by Rosalind Chin of Bloomberg News from the Hong Kong studios. Morning, Rosalind. Well, here in India, we're focused on the central bank and the result of the policy meet today. But what's happening in Asia this morning, in the rest of Asia?
Well, there is some optimism around the region on these reports that a trade deal may be closed between China and the US, fueling a bit of a rally in some of the markets. Overall, though, I have to say broadly, it's pretty much a mixed picture and quite flat. The MSCI Asia Pacific really at only losing by 0.01% right now. So really the definition of flat, I would say. Around the region, we've seen the Nikkei is up by about 1/5 of 1%, the Topix up by about 0.14%. It's extending into positive territory there, as investors, of course, are building on optimism about these trade talks. We had investors looking really for incentives to boost the stock markets, while they, of course, remain cautious until more concrete details come out of any discussions that Liu He and the US officials may be having today in Washington, which we're hearing that Trump is going to be expected to be meeting Liu He today at the White House. So maybe some signs of progress there. Now, we saw the Topix rising to a 1-month high on Wednesday. We'll see whether it can top that today. Chip makers, of course, climbing for a second day now, again with hopes of that US-China trade deal coming through. Let's take a look at some of the numbers, because Japan display earlier had risen more than 8% earlier in the session. Now it's up by about 4.75%, and some of the others like Adventist up by 3.5%, Simco up by more than 5% at this point in time. The yen, of course, making gains against the dollar. We did see that NHK had reported that Carlos Ghosn, the former head of Nissan, had been rearrested on suspicion of using company funds for his personal purposes. So he had been out on bail for a while, now rearrested. Prosecutors saying he sent Nissan money to accounts he controlled. He said this is outrageous, and they estimate, the prosecutors are estimating the damage to Nissan at about $5 million US dollars. Here in Hong Kong and in China, we are seeing airline stocks jumping. This is after the Chinese government said that they were going to halve some fees which they imposed for its Aviation Development Fund and hydro project construction, and that is going to come in on July the 1st. We're seeing some of the airlines here really taking a big leap today. So China Eastern up by more than 10%, China Southern up by nearly 12%, and Air China making gains of more than 9% at this hour. In fact, they've actually pared back some of their gains. Some of them have jumped a lot more than that a little bit earlier, just after the markets here opened. So we're also seeing the airports are having a boost on that as well, with Shanghai and Shenzhen airports both showing gains on the back of that news. Back to you.
Thanks so much for that, Rosalind. Well, you heard about the update with regard to the trade talks between US and China, both with regard to the US markets and what's happening in the Asian markets. But to tell you exactly what's being talked about, what the updates are, here's a report by Job Sobzik of Bloomberg News.
We're getting some insights, at least, into where the talks are going. Among them is a deal for China would get until 2025 to implement certain parts of it, including commodity purchases and allowing U.S. companies to wholly own their subsidiaries in China. They're moving ahead with those. There are still a few other issues that are unresolved, including the enforcement mechanism. The U.S. wants to be able to retaliate against China if it does not comply with the terms. The Chinese are holding back on that and not vowing to retaliate for any U.S. moves. The other thing is what happens to the tariffs that are currently in place. The Trump administration has said that they may hold some of these tariffs in place until it is sure that China is complying with the agreement. The big question is how comprehensive it will be. The U.S. side is very eager to get a deal, particularly with President Trump's re-election campaign coming up in 2020. They want to get those commodity purchases contracted so that that can sort of close the trade deficit with China as the campaign is getting underway. But they are still trying to move toward having some sort of meeting between Trump and Chinese leader Xi somewhere to sign this agreement in the near future.
Now, we've been bringing you a blow-by-blow account of what's happening with regard to the Brexit. The latest is that the UK Parliament has blocked a potential no-deal Brexit by a single vote. The House of Commons voted 313 to 312 in favour of blocking a no-deal Brexit. Kathleen Hayes brings you the latest on the midnight drama that took place last night.
313 to 312, Sherry. And I think a lot of the reaction right now is almost half of the people who voted in the House of Commons are ready for a no-deal Brexit. That maybe they don't really want a no-deal Brexit. They just want to keep it as a bargaining tool. And of course, what's happening now, and one of the reasons it's a problem for those who probably were in the 312 camp, you're probably moving closer to a no-deal Brexit. Let's look at some of the right-off-the-cuff analysis that's come out after this vote. First of all, the bill will go to the House of Lords next. This vote that blocks the no-deal Brexit, makes Theresa May get an extension, and it's expected to be passed there. Businesses, of course, have to be breathing a sigh of relief. Nobody wants to go off that hard Brexit cliff. The Brexiteers are said to be furious, though. Did the Remainers hijack the vote? And of course, if there isn't a deal found pretty soon and they have to go to the EU for extension, it could be a very long delay ahead. So just extension beyond April 12th, that's what Theresa May is going to have to get. If they don't get a deal passed by Parliament, they've only got a few days.
Yeah, Theresa May and Jeremy Corbyn did meet today. They look like they'll be meeting again. Was there any progress?
Well, they seem to be fairly positive. They both called the talks constructive. He said, Jeremy Corbyn, that is, the leader of the Labour opposition, that party, said the meeting with May was useful but inconclusive. He says Corbyn does the Labour Party also, they do want a customs union. We're pretty sure about that. That would keep the UK closer to the EU than some would want, but they would not have to worry about tariffs. He also says that they may want access to a single market. They want regulatory alignment in terms of trade, in terms of banking, and more. I think the big question now, will Jeremy Corbyn, in order to get support from members of his party, need to also get some support for a second referendum, at least on the next deal that's passed itself, from Theresa May? That is a huge question. She's shown no inclination before to back that.
All right, well, it's been a while since it started, and it could be a while before it's resolved. But here's Agam Vakil to tell you what happens today with regard to the trade setup and also what's happening in the futures and options space. Agam, well, notwithstanding the cues we're receiving from overseas, we're obviously looking at policy today and how that will affect the markets.
Yes, Alex, and the policy is going to be important because we saw a little bit of a pause yesterday after the kind of rally that we've seen in the markets. So the Nifty, well, hitting life highs and then coming off by around 100 points through the course of the day. For now, the SGX Nifty is indicating a very quiet start, albeit in the green. And as I was suggesting, 0.6% cut for the benchmark with over 1% cuts for the mid-cap and the small-cap indices. So we're watching out for the traction coming through here. Well, Nifty Bank and Nifty PSU Banking Index also seeing a lot of weakness. And again, these indices will be active as we see the policy come through. This time around, the policy's well, announcement timing has also been advanced. So we keep an eye on that one. But, well, ADRs did reasonably all right. Tata Motors, Vedanta, HDFC Bank, and Infosys as well. And, well, some weakness in Dr. Reddy's and ICICI Bank. But let's move on and talk about your other factors. And today is where we saw FIIs sell stock worth 1,000 crores. And these are, of course, provisional figures, so we'll have to go back and see once we have the final figures as to when the last time we saw FIIs sell. And I reckon this was probably sometime the first or the second week of March, and certainly not before that. Of course, in terms of contributors, the heavyweights like Reliance Industries, L&T, and ICICI Bank are bearing down the indices. Let's take a look at the futures and options space, see what's happening here. And we're actually seeing some amount of unwinding, not unexpected for the Nifty futures. The Nifty banking futures also, well, I reckon we'll be seeing unwinding. So if we can have that on your screen as well. Actually, it's open interest remains largely unchanged. But let's move on and talk about your open interest distribution. And this, of course, is where we're seeing a lot of traction around the 11,800 mark, 11,800 call written on expected lines. And this is as far as your change is concerned. So as I was suggesting, you've seen writing around the 11,800, 11,900 calls. Let's move on and talk about your WIX. That has risen even further and on, again, not surprising at all, inching towards the mark of 19. And the put-call ratio, of course, has fallen further in tandem with the benchmarks at around 1.42. And in terms of stocks which are in the F&O band, we have Adani Power, IDBI, and Reliance Power. And one new stock entering the band is Jet Airways. And in terms of other stocks that we are watching out for, we have Amara Raja Batteries. Keep an eye on that one. We have a lot of brokerage notes this morning, and this is, of course, largely an account of the pact that's been broken with Johnson's Control. BPCL, Dish TV, HPCL, a lot of weakness in OMCs too, a lot of shorts there. And in terms of unwinding, we have Hexaware, Cholamandalam, and Bharti Airtel looking at some amount of longs unwinding. But on the whole, Alex, we're not really expecting too much until we have the policy, and after that, we'll have to wait and watch whether or not the markets do actually lift off from there.
Absolutely, Agam. Well, all right, let's talk about the policy on that note. In fact, the fact is that global growth concerns are ongoing. There are concerns about growth in India as well. And the readings on inflation have been subdued in the recent past. And all of those have really come together to bring in a clarion call for interest rate cuts in India. And the Monetary Policy Committee will announce its decision after a meeting this afternoon. So what are economists pricing in, and why is liquidity a big part of the mix this time? Ira Dugal tells you in this report.
India's Monetary Policy Committee delivers its first policy for the new financial year on Thursday. And if markets and economists are to be believed, it's going to be a slam dunk this time around, with most economists predicting a cut in the benchmark rate. 6.25 on the repo rate is where you were at in February. The expectation, 41 or 43 economists polled by Bloomberg, are suggesting another 25 basis point cut. That would bring you down to 6%, which is pretty much where you started in August of 2017. So there will be those who will say there was a need to raise rates in the middle given that inflation was under check. Well, you can quibble about that, and yes, the RBI must take the blame for having over-anticipated inflation pressures in the economy. But as things stand, with the headline inflation number seen below 4% all the way into Q3 of the current financial year, there is room for another rate cut to 6%. Some are arguing for a stronger rate cut on the basis of growth problems, but I'll get to that in a minute. The MPC has to talk about inflation. It is an inflation targeting MPC. So even though everyone says that, the governor has made it clear that they're targeting the headline number, they will have to try and explain some of the internal dynamics of inflation. For instance, I know I sound like a bit of a broken record here, but core inflation does remain high at between 5.5% to 6%. Sajid Chinoy of JP Morgan is questioning whether headline will move to core or core will move to headline. He's also questioning why inflation expectations are so high, but there are others who say that the core inflation number will move towards the headline inflation number. So that debate, my point is, should be addressed by the MPC. They should also address why inflation expectations continue to be elevated despite such low food prices. But I suspect the larger chunk of debate this time around will be around growth. There is a lot of concern, both anecdotally and in the data, on growth. For the full year, you're expecting GDP growth at 7%. This is FY19. Remember, the RBI has actually not cut its forecast. They maintained a forecast of 7.4%. So one would expect them to pare that down this time around. But that's backward looking. The question is what's happening in the economy now. Again, economists are split down the middle as to how worrying growth concerns are. And even the economic indicators actually have been mixed. So, things like bank credit growth have been reasonably steady. Those are time-tested indicators of where the economy is going. PMI was looking good until last month, but the data that came in this week showed some weakening, as did cement and steel sales that came out in the core sector data. Imports too have been weakening. Auto sales have been weak. The judgment to be made now is that how much of this is temporary. Has the economy stabilized after initial slowing, or is there a fresh sort of cause of slowdown that is coming in, which needs to be addressed? The MPC, of course, would address this in its inflation targeting framework by saying that the output gap has widened, and hence we expect the inflation pressures to actually come off as well, and we will act basis that. So growth should be certainly a point of conversation. What judgment they come out with will be interesting to see, because, as I said, the market is split. The other point of debate, once again, is on liquidity. Again, the markets are saying that the RBI is getting its liquidity stance wrong. Now, they have been infusing liquidity all through last year through open market operations. Now they have started doing forex swaps to bring in liquidity. At the present juncture, the liquidity is still in deficit, but not a very large deficit. So the question is not so much about current liquidity, but about the liquidity framework that the RBI is using. Now, market participants are saying that the RBI's focus on the weighted average call rate is incorrect. That doesn't give them a clear picture of what liquidity looks like in the market. So we'll see whether the RBI says anything on this. This will be within the RBI's purview, so you'll likely see it in the press conference rather than actually in the MPC's statement. The reason everyone is talking about liquidity is because you can't deny that the 25 basis point cut in rates actually didn't transmit into the economy, not just through bank lending rates, but even through the bond markets, at least at the long end of the bond curve. So the old tenure, that's the 2028 bond yield, is more or less steady compared to where it was when the rate cut was announced, and when rate expectations changed quite dramatically. There should have been some impact on the tenure, but there hasn't been, and market participants are blaming that on liquidity. They're also blaming the elevated spread for corporate bond yields on liquidity, although it could be argued that there is a little bit of risk aversion that has come into the market since last September and the ILF has defaults. But in any case, the market wants the RBI to relook its liquidity framework to ensure that in an easing environment, that policy easing actually filters through to market participants and to borrowers. We'll see how much we get on that. But in terms of the headline rate, I think the general expectation is that one more cut is in the offing.
Absolutely. Well, consensus is building that today there will be a cut. Let's talk a little bit more about what is expected, though. Sajid Chinoy of JP Morgan is among the 41 economists who are expecting the Monetary Policy Committee to cut rates by 25 basis points. But he cautions that it may well be it may well be the last cut in some time, with core inflation continuing to remain at 6%. Rajiv Malik of Macro Shanti, meanwhile, believes that the 6-member committee has the room to cut rates by as much as 50 basis points. Listen in.
We do expect another rate cut at the April review, just given the benign nature of headline inflation. But we need to be very mindful of what core inflation is telling us. That has been very sticky. The fact that core is at 6% tells me that there is not as much slack in the economy as we think. Output gaps are closing, pricing power is picking up. And our own research finds that over time, over a 12-18-month period, headline gradually converges to core. So I think that should worry the MPC a little bit. We do expect another cut in April, just given that the benign nature of headline and the trajectory in the foreseeable future. But I think beyond that, the MPC would need to be very careful just to monitor the signals emanating from core and to recognize that some of these year-on-year prints for growth are base effects, and we would expect that as the year goes on and these base effects normalize, the fact that growth is stabilized and maybe inching up should also be a factor.
I'd say even more, a bit more aggressive. So I actually think, while you rightly highlighted that a 1/4 percentage point is pretty much a done deal, I think there's a strong case for the MPC to review and go in for a bigger 50 basis point cut, even if it doesn't necessarily want to change the stance. To me, there is no inconsistency between that action and the action on the change in stance. I think analyst MPC itself has been slow in adjusting to the change, both globally and domestically, be it on inflation or as far as growth indications are concerned. So I do think it needs to redeem itself for having had a slow start off the block and to come out with a deeper cut.
On to an update on a struggling airline, Jet Airways. The lenders are yet to pump in the 1,500 crores that was promised to revive the airline, and that's because they are, or they want Naresh Goyal and Etihad to pledge part of their stake in the airline as a guarantee. Vishwanath Nayar brings you the latest in this report.
Lenders to Jet Airways, primarily led by the State Bank of India, are planning to seek a further equity stake to be pledged by Etihad Airways as well as Naresh Goyal to give the 1,500 crore debt support that they had promised back in March. Now remember that in March the lenders had implemented a resolution plan, as part of which they were to get about 11.4 crore equity shares from the company, which would have brought up their stake to about 50.5%, putting them in the driving seat, while Etihad and as well as Naresh Goyal would have seen their stake come down considerably, about half of what they held previously. As well as that, Naresh Goyal and his wife Anita Goyal have both left the Jet Airways board, and Naresh Goyal has also stepped down from his position as the chairman of the company. Now, this 1,500 crore debt support that was part of this plan would have been used to repay some of the employee dues as well as lesser dues which are causing planes being grounded for Jet Airways. In exchange for this 1,500 crore, the lenders are seeking a more equity stake from both the partners, which will be held in a trust and will be marked to market on a regular basis. Of course, this plan is still in a draft stage and majority of the lenders are yet to approve it, as well as the lenders will need some kind of agreement from Etihad Airways as well as Naresh Goyal for them to move forward. But remember, the lenders are also dealing with another uncertainty because the Supreme Court has struck down the February 12th circular only on Tuesday. Because of the February 12th circular, lenders had swung into action with respect to Jet Airways after it had defaulted on its repayment on the 1st of January. And after that, they have been trying to implement a resolution plan within the 180-day period that was set in the February 12th circular. But now with the circular gone away, it is unclear how exactly that 180-day deadline would work and whether they would be able to value the stake that they control, about 50% of the stake that they control, at rupee 1, which they had announced earlier. Now, in the absence of clarity regarding these aspects, the lenders are planning to go to the Reserve Bank of India as well as the government to seek further clarity and decide how exactly they need to resolve this case. Meanwhile, Jet Airways continues to see its planes being grounded. Just on Tuesday, it informed the stock exchanges that 5 more planes have been grounded by lessors because they have not been paid their dues. And according to an estimate by the DGCA, Jet Airways is currently operating about 28 planes on its fleet. Now, if a resolution plan is not reached soon, and whether this 1,500 crore debt support is not provided by the lenders on an immediate basis, more planes could be grounded and the airline could see its entire operations being grounded.
All right, Jet Airways in focus today. It's in the F&O ban, remember, as Agam pointed out. Let's head to Mishika Parekh now, who's joined in with all the stocks in news. Good morning, Mishika. What do you have for us today?
Yeah, we have several stocks today. The first one being Reliance Industries. Its arm is entered into a definitive business transfer agreement with Haptic for around 700 crore rupees, out of which 230 crores will be the consideration for the initial business transfer. The company will hold around 87% stake in the target company. Haptic is a conversational artificial intelligence platform. Then we have the Q4 update on Indiabulls Housing Finance. The company says it holds cash and cash equivalents of 27,512 crore rupees, which is $4 billion. The press release also stated that the CRAR as of March 31st, 2019 is over 24% and net gearing is at 4 times. The total resources raised in the March quarter was 17,300 crore rupees. The company says that to deliver 17% to 19% PAT growth in the current financial year, the company plans to raise a net total of 26,000 crore rupees in the 4 quarters of the current financial year. Then we have Nalco's alumina output is at a record high of 2.15 million tons for financial year 2019 as compared to last year's 2.1 million tons. Aluminium production is at 440,000 tons versus 426,000 tons. The company says that the net sales this fiscal year will be at 11,397 crore rupees versus 9,376 crore rupees as earnings from exports jump to 18%. Manappuram Finance infuses 263.92 crore rupees in its arm. The company says it recently subscribed rights issue of its subsidiary Ashirvad Microfinance Limited to enhance its net worth. And lastly, we have Godrej Properties. They enter into a joint venture with the developer to develop 4.25 acres property in Mumbai. The project will offer approximately 1 lakh square meters of saleable area and will be developed as a luxury project.
Thanks, Mishika, for that update. Yeah. Well, let's go to the big brokerage calls of the day now. Somit Sarkar is here to tell you about a couple of them. Somit, what do you have for us? Good morning.
Good morning, Alex. On the big brokerage call today, we have a note on the small finance bank where Nomura has initiated coverage on all the 3 small finance banks, that is Equitas, AU Small Finance and Ujjivan, and they have said that Equitas is their preferred pick here. Now for Equitas, it's a buy rating with a target price of 165 rupees. Now the brokerage believes that the bank's conservative approach, niche positioning in core segments and strong operating leverage potential will improve the bank's return on asset to nearly 2% by FY21, and on the back of this, they have a buy rating with a target price of 165. For AU Small Finance, it's a neutral rating with a target price of 590. Now the brokerage says that the company is best positioned among the small finance bank across most metrics, but its demanding valuations leave a very little room for a disappointment in its earnings going forward, and that's the reason it's a neutral rating. For Ujjivan, it's a sell rating with a target price of 315, and this is as the brokerage is concerned on the bank's strategy to gain traction through its liability business. Also, it expects Ujjivan's return on asset to be lower compared to Equitas, and that's the reason why it values the company at a discount and has given a sell rating with a target price of 315.
Thanks so much for that, Somit. Well, that's all we have for you in this edition of All You Need to Know, but do stay tuned. Today is policy day, of course, and while there is a consensus expectation of a cut of 25 basis points, you'll want to read the fine print. This is Bloomberg Quint.